Welcome back. Well, it is definitely a weak market, and I just want to point out a couple of stocks which are at 52-week lows within the entire pharmaceutical space. And the sentiment of the market is actually very obvious in stocks such as Natco Pharma, because there is positive news in that particular counter today. They have managed to launch this particular agrochemical CTPR in the Indian market. And despite that positive news, that stock is still sitting at a fresh 52-week low today. Remember, the CTPR market, in fact, is a size of around 2,000 odd crores. So other stocks which are at fresh 52-week lows in Biocon, so that stock should come up for you, down 2%. Pharma has been in a different orbit. There are concerns coming in from their Chinese-based promoter and maybe the liquidity of their holding company. So that stock is down around 4%. Met Plus 2 is a relatively new listing, so that stock too is seeing some amount of pressure today. But let's talk about the chemical space. We have Mr. Chahal, who is the CFO at Meghmani Organics, who joins in to decode the impact of the energy crisis in Europe on the Indian chemical industry, as well as the impact of a depreciating rupee. Hi, sir. Welcome to the show. If you could start by giving us a sense in terms of how the export business is doing, considering that, the energy crisis is weighing on Europe. We are talking about a global recession even more. Tell us how business is for you. Has there been any sort of direct impact on demand?
Good morning, and thanks for the invite. As all of us know, so globally there is a fear of recession which is going on, and top of it there is a energy crisis in Europe, and there is a drought situation in China, Europe, and even in our US. So overall demand is low. That is definitely impacting all the industries. And another factor is the year end, which is the calendar year globally, which is followed. So in the third quarter, normally it remains slightly low as compared to other quarters. So this is the overall demand scenario. But on the positive side, if we see, there is no pipeline inventory as of now. So channel inventory is almost negligible, which is specific to consumption only. And once the demand approves, I think uptake will start in the coming quarters.
So when you say that the demand is low currently, Mr. Chahal, can you give us some numbers on what this could mean in terms of your growth, on your revenues as well? Because on a quarter-on-quarter basis too, your revenues were actually down 4%. Do you see further pressure?
Definitely there are two ways. One is demand, second is on the price front also, because when the recession fear is there, so no buying happen, demand is, and prices are also contracting across the globe. So that is another factor. So definitely there is a pressure on the top line also. In line with that, there is a reduction in raw material also. So we more focus on the EBITDA margins than the top line. So definitely top line is important, but EBITDA margin is something which we keep track of that. So where are we focusing on?
So what can you speak about in terms of EBITDA margins? What are you focusing on? Because Q1 you did about 17.1%. Can you give us a sense of, input prices, whether they're going up or not? Prices for 2.4D, which is roughly about 20 to 25% of your revenues?
Yes, 15 to 20% is coming from 240. And another major product is the pyrethrin, which is China competition. So these are two major products which constitutes almost 30 to 40% of the top line. So price has gone down for both these products, and simultaneously raw material also. So that will have an impact on the top line. Definitely, but in our case, if you see where the demand currently comes from, so if we see where the major recession in Europe, so Europe in agrochemical we have a less than 5% exposure, so that will not have much impact. In case of pigment, we have a 10 to 12% exposure, so there we see a lot of pressure coming in case of pigments.
You mentioned China fleetingly, so I wanted to understand that, do you benefit at all from the China Plus One opportunity? Have you already benefited in terms of business?
Definitely, because the China Plus, it is the overall, which is the sentiments prevailing, but it will not happen on one day. the global customer look on the long-term perspective, and they look from the suppliers who can supply on a sustainable basis. And definitely we are interacting, and we are currently also, we are supplying to all multinationals. The multi-purpose plant which we are coming up with, and now we are able to demonstrate our infrastructure also, where we can supply, and the products which we are coming up is with backward integration. So definitely it will have impact, and we will see a lot of traction from multinationals. We will be supplying to them.
Okay. So if you are seeing increasing pressure in the pigment space, you're saying that demand from Europe is quite muted at the moment. Would all of this put pressure on your balance sheet? Because, you know, your gross debt currently is in excess of 400 crores. Do you see your working capital rise, your debt figures, do you see them rise by the end of the year?
In the short term, there are hiccups actually, as we see a lot of disruption is happening. But on the annualized basis, we see we will be remaining in the range actually. So in case of agro, definitely between 16 to 19%, we will be able to achieve our EBITDA margin. Same way in case of pigment also, it is 9 to 10%. So we will be remaining there only. So overall, if you see, debt is only less than 400 crore long-term debt, where my debt equity currently stands at 0.34. And as a guidance also, what we are keeping is we will be maintaining below 0.5. So we don't see much leverage on our balance sheet. So we have a very strong balance sheet.
You have a lot of capex as well, along with a strong balance sheet, because you were on track to, commission your phase 1 of the TO2 plant, the titanium dioxide plant, as well as the MPP plant. So just wanted a quick refresher on that, whether these plants are on stream, and secondly, on MPP itself, you said what, 350 crore capex. What's the revenue opportunity here?
Yes, so both these projects, in case of agro multi-purpose plant, that is on plan. I think the mid Q3 we are going to commission that project. And in case of pigment also, by end of Q3, so we'll be commissioning the first phase.
Okay.
From the revenue perspective, because this is the new chemistry as far as titanium dioxide is concerned, so we are not anticipating much revenue. Our more focus will be on the stabilization and acceptability of the product. And from next year, definitely there is going to be at least 50 to 60% capacity we will be running in this plant. And we expect that between 200 to 300 crore top line should come from titanium dioxide in pigment division. And in agro division, in the growth, when we are commissioning in the mid of next quarter, and a ramp up will happen, and we see around 50 to 60% capacity utilization in the next year, 23-24, and then it should add 350 to 400 crore of top line in agro division.
All right, Mr. Chahal, we'll leave it at that. Thanks a lot for joining in, and all the best for the quarter to come. Well, that's the word coming in from Meghmani Organics. They do say that there is pressure definitely in a market like Europe. And although they are confident of maintaining their margins, overall demand is quite low, and that's the reason why the stock is down about 3% as well. But let's do one thing before we slip into a break. Here's some great news for investors. You can now track the US market action real time on Money Control. Log on to Money Control website or the app and stay informed